Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, welcome to this week's Motor Trade Radio. It's been a busy old week for the industry, hasn't it, Phil? Because I know you're at Car Dealer Live. There's been one or two big news stories that have broken, especially one that we'll be focusing on soon. But you were at Car Dealer Live. How was it?
Yeah, it was a great event. I mean, as you say, it's probably good that we recorded a little bit later in the week because we thought we might try and do the recording a little bit early just to give us a bit of breathing space. But it's a good job we didn't because, as you say, there's plenty of headlines that are broke in between. But no, it was great. I mean, I've recently launched, and you'll start to see some of the media coming out of it over the next few days. There's a bit already being covered by Car Dealer that we've recently launched a 4-year forecast for both new car registrations, used car transactions and the used vehicle park, but by fuel type. So one of the things that we were launching down at Car Dealer Live was that white paper that is available at the coxautoinc.eu website. Now that's where we think about what's been happening over the last sort of 4 years in the pandemic period, through the production loss that we talk about a lot, Curtis, don't we? But actually, what does that mean by fuel type? What do dealers, what do retailers need to start thinking about when diesel has gone from 3.8 million registrations between 2016 and 2019 to 882,000 between 2020 and 2023. So you've gone from nearly 4 million in 4 years to less than 1 million in 4 years. And we're expecting that to continue to decline to about a 3% market share by 2028. So, what do dealers need to start thinking about as EV and alternative fuels continue to become the dominant player in the used vehicle park? So that's kind of what we're trying to highlight in the paper.
Yeah, I mean, it's fascinating, isn't it? Because we are seeing this shift, and not necessarily to pure EV, is it? Because hybrid and plug-in hybrids seem to be generating a lot of interest. And I was reading something from Bloomberg during the week about how they're forecasting a surge in hybrid sales. So it'll be interesting to see your figures and how you've worked it out over the next 4 years.
Yeah, no, we have, and we've expected that hybrid registrations will represent at least 25% of the market, with over 2 million units over the next 4 years. So we are forecasting that hybrid will become a dominant player alongside EV. To the detriment of diesel and petrol now. So, it's kind of how it's starting to play out. But no, it was a great event, and let's say we won't spend too much time on that. But I was lucky enough to be joined on the panel with Del Wyatt, our friend of the podcast, and a little friend of the podcast that we now know about with Danny Minshall, who is retail director for Greenhouse Group, who is an avid listener. And he did point out, Curtis, that we didn't cover one of his stories recently. So we have to make this up to him.
Yeah, well, Danny, come on the show. Tell us all about it. There's an open invite to you.
Exactly. There's a lot going on in Greenhouse Group. So, as I say, Danny, I know you'll be listening this morning, and the offer goes out. We will be in contact. And do please come on and tell us everything that's happening within the Greenhouse Group. But no, it was great. It was great. I briefly bumped into Phil Jones, our friend from Motors, who was there, and many others, and Stephen Whitten was there as well. So no, it was a great event, great networking. I'm sure I'll get a cold this weekend just on the back of it because everybody seems to have some kind of cough or cold at the event.
Yes.
So I'm sure I'll catch that.
One of the things I picked up, because whilst you were at the event, I was sort of behind the scenes putting something together for Motors about Google vehicle ads, and I know Google were presenting at Car Dealer Live, and this is particularly interesting, isn't it? Because Google vehicle ads, which I think is available in certainly the American markets, is coming to the UK, and I know Motors is part of the beta launch test for it. And I mean, simply put, it's basically when you go onto Google, you search for a product, be it trainers or albums or whatever, and you get that carousel, don't you, of several items that are for sale, where they're on sale, and the price. Well, this is going to be introduced for used cars, so it's a very exciting development, this, and it's being piloted at the moment in various regions.
Yeah, exactly. So that was part of why Google were there yesterday to sort of share that, how they're doing with it, when it's going live, etc. So so I was aware that Motors and were part of that beta, and I believe it's going quite well. So I suppose it is, as you say, it's been successful in other markets, particularly the US, and does work for other products very successfully.
Yeah, definitely. And also on this week's show, we've got a snippet from our interview with Chris Ashton Green. Chris is the CEO and founder of Regs Cars, and we put out the full interview during the week, but we'll have an extract from that in the second half of the show.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Okay, headlines this week from Car Dealer, Auto Retail Agenda, AM, Motor Trader, and Motor Finance. Starting with the big one, Cazoo to exit car retailing, delist, and become a marketplace. February registrations up for new cars and vans, both hitting new highs for the month. Average retail used EV prices fall by 15% to new post-COVID low year on year, reports Motors. Vertu reports stable used car prices in latest trading update, but like-for-like drop in new retail sales. And finally this week, the FCA asks every gap insurance provider to pull product from market.
Yeah, there's some big headlines there, Curtis. So we've
got a lot to get through, haven't we?
Yeah, if there was ever a time that you need to refer to our newsletter on the Monday morning that's distributed through LinkedIn, then now's the time, because I'm sure that we're not going to be able to cover every story in masses of detail. So you'll need to take advantage of the links we do share on Monday morning. But as Curtis said there, we're heading over to Auto Retail Agenda with the story that broke during the week. Was covered very much across the majority of the trade media. Was that Cazoo to exit car retail in delist and become a marketplace. And this is that Cazoo will cease to be a used car retailer. It will delist from the New York Stock Market Exchange, and attempting to become a rival to Auto Trader, CarWow and Motors. So yet another chapter in the CarWow Cazoo story there, Curtis.
Yeah, I know. I do feel as though we've been here before, because every couple of months we've got a big update on Cazoo and what's happening, and this is the latest development. A bit of a surprise, certainly a major pivot. But this was all based on, it was a stock market statement that was released during the week. And in the statement, it said the Cazoo board has reviewed the strategic options for the company and believe that a pivot to a pure play marketplace business model is the best direction for Cazoo and all its stakeholders. So, didn't see this one coming. I don't think many people did, but what a fascinating development, because I guess what often gets overlooked is that Cazoo is still a relatively new player. They only came to the UK, launched in the UK in 2018. Of course, by Alex Chesterman, who had the success of Zoopla and Love Film behind him. But back then, it was purely digital. But from there, it brought up the Imperial Car Supermarket chain. It expanded into France and Germany and other European markets. It listed on the New York Stock Exchange based on a valuation of $7 billion. And then started scaling back, didn't it? It sold some of the prep centres, the handover centres. There were redundancy notices announced in January, and Alex Chesterman exited the business in December. So, that
sounds like somebody's got a story there, Curtis.
Yeah, I know, but that's a very short timeline, isn't it, for a business to go through so many twists and turns?
It is, yeah, and as you say, I mean, at the heart of this and sensitivity from our perspective is there are people involved with this now, because there will be inevitably redundancies and job losses across the business. So I think it's it's a shame that those that have stuck to the end of everything in this pivot, that there is still jobs that are going to be lost with this. And you mentioned the market value there, and auto retail comment that at the time of writing this story that Cazoo had a market cap of 16 million, and it does refer back to the August 2021 when it was valued at that 6 billion figure there. So I think inevitably it's not over. I mean, in the story, they talk about Cazoo has also hinted it will also launch a rival to the We Buy Any Car proposition and other consumer-facing car buying services, and said that based on this and its other proprietary pricing data, Cazoo is well positioned to offer a car dealers valuable customer and market analytical insight to support their sales and marketing activities, and to help them source new stock in the UK currently stock-constrained used car market. So, interesting. I suppose the big question with this is, it's the engagement now between the dealer network and Cazoo after the years between the two.
Yes, yeah. Because certainly when Cazoo launched in the UK, it was very much looking at the established model of used car sales and coming with a totally new proposition, which, I mean, let's be frank, it did put up a lot of dealers' backs, because it was heavily critical of the existing used car sales model. So, it's a major pivot. Time will tell how they'll do with this. But what interested me, one of the aspects that interested me was because my immediate thought was, well, they're sitting on a lot of stock. What's going to happen to that? Because they obviously need to liquidate it as soon as possible, because they won't be selling their own cars on a marketplace. They'll be selling dealer cars. And a partial answer was presented at the Car Dealer Live event that you went to, because Car Dealer followed up with a story about friend of the pod, Peter Waddell, who runs the Big Motoring World business, actually putting in an offer for 3,500 cars, because he said during an interview at the event that he heard about what had happened to Cazoo, and he said, I phoned in the first minute I heard about the change in Cazoo, and offered to buy 3,500 cars. At the moment, I've currently got 6 buyers going through the whole stock list right now. I'm going to buy them. So that may well be the answer to the question that I was sort of posing.
Yeah. Not that Pete would ever miss a potential opportunity, but he's certainly taken the opportunity. I mean, we know that Pete Waddell took many of the transport, didn't they? The vans and stuff.
Yeah, the delivery vans.
The delivery vans off Cazoo when he set up his car buying business. And like I say, Peter always there to take advantage of an opportunity when it presents itself to him. So we'll see. And like I say, competition is always healthy. It's never good when you see businesses go under. I think the whole story of Cazoo from start to where it is today has been fascinating. there's been a lot of pain for a lot of people throughout that period, and I say, you know, there's a lot of people involved with this now in terms of job losses potentially. So, you know, let's hope that something comes out good at the end of it. And, you know, as I say, competition's never a bad thing, is it, in our industry? So let's hope it comes out well.
Yeah, definitely.
And it gives us good content on a regular basis, Curtis. So.
Well, I was going to say we will be returning to this story because I mean there's lots more to come out of this, and you know, it'll be interesting to see what Cazoo actually says, you know, over the coming weeks and months, and you know, how it approaches this new approach to the business as a marketplace rather than as a direct seller.
It's very early on. I mean, there's a lot of opinions and subjective opinions at the minute. We don't, you know, nobody really knows the whole story apart from themselves. So we'll see how it plays out and what emerges. But the new car and van registrations have been announced this week for the month of February. So we'll head over first to AM Online, and this is that EVs still need vital boost as new car sales record best month for 2 decades. And this is saying that EV need vital boost as new car market records best monthly figures for 2 decades, that the sales of new electric vehicles held their own during the traditionally slow month of February, although the segment still needs a vital fiscal boost if the private buyer is to be convinced to make the switch. Now, we know that there's been a lot of commentary on the back of the budget announcement that there wasn't anything really significantly assigned to the automotive sector apart from some R&D. I say some R&D, I think it was about 250 million was given to R&D for automotive and aerospace, but you know, there was a lot of work done by the SMMT and other associations to try and get the government to consider VAT cuts and things like this to help this transition to EV, particularly for the private consumer, and that hasn't happened. So there is, I think, concern on the back of the new car figures that there's not that stimulus at the minute in terms of EVs.
Yeah, definitely. And as you say, AM did very much lead with the EV angle. So it's worth just saying that EVs for the month were actually 22% up, taking a market share of 17.7%. So year on year, that market share has grown by just 1%. So it's not really accelerating as much as it needs to achieve those ZEV mandate volumes. But you know, still a pretty good performance in what is a fairly small month, because obviously it comes before the March plate change. Within that, because you know, we always look at you know, private versus fleet. So in terms of overall volumes, private retail sales were down 2.6% to 29,000 units, and taking a market share of 33.7%. So you know, that really is dropping. I mean, that's down from 40% last year. And you know, in normal times, you'd see the market roughly balanced between fleet and retail. So there's still a lot of retail buyers staying out of the market. In terms of fleet sales were up 25%. So fleet accounted for 64.5% of the market, based on just shy of 55,000 units. So, you know, again, and we say this every month, you can see where the strength of the market is. It really is in fleets replenishing.
Yeah, definitely. And you know, as I said right at the start, around the 4-year forecast, so again, you know, this drive, this diesel year to date, diesel has dropped from a 7.7% market share down to a 6.3%. Petrol fairly stable, 57.4% last year to date over January, February, down to just 57% this year. But as we said at the start there, you know, HEV fairly stable, down 0.9% from 13.9% down to 13% this year. But plug-in hybrid now starting to creep up a little bit. It's from 6.7% 8% share last year for year to date to 7.9% this year. So, marginal lift there for both plug-in hybrid and battery electric vehicles, as you said earlier, Curtis, but certainly not to what you'd want to support this transition to battery electric vehicles. So still a lot of work to do, but as we know, we're now in the month of March, and this is going to be the key performance figure into it for the month of March with the first registration plate of the year, and give us a story for that full first quarter, which is a key quarter for both the OEMs and the retailers, for what will sort of set the scene for the remainder of the year. So we'll keep a close eye on that. And just before we head over to the what's been happening in the LCV sector, just as usual in terms of some of the things that's been happening in Europe, the Italian market is slightly up 12.8% to 147,000 registrations in February. Spain marginally up 9.9% to just over 81,000 registrations. Germany up 5.4% to 217,000 registrations, and France up 13% to 142,600. So again, reflecting what's happened in the UK, reflecting this push from the OEMs into the marketplaces, and I suspect in the majority of their markets probably not much different to the UK, seeing sort of increase in that fleet sector as registrations increase there.
Yeah, definitely. So overall, February in terms of new car regs, it was a 20-year high for the month, and with the market up 14%. And if we look at the van market, Motor Trader covered this. The headline was van sales hit 26-year high in February. So good positive news for the van market, which we've seen recovering now month on month, and this is very encouraging. UK demand for new LCVs grew by 2.2% in February to just shy of 18,000 units, which marks the 14 consecutive month of growth. The increase represents the best February performance since 1998, according to the SMMT, and as part of that, demand for large vans rose 1.4%, while medium and small size vans, demand for those declined by 6% and 21% respectively. So we can see where the demand is coming from. It is for those larger vans. Battery electric van uptake is at 4.7% market share, and that's actually down from 5.5% 12 months ago, as volumes actually fell by 12.3%. So again, we need to keep an eye on this, because those battery electric van registrations are heading in the wrong direction at the moment. We need to see those. We need to see an uptick there. Although I must say, I did see during the week that there was a zero APR deal on the Ford Custom van, which unusual to see 0% APR on vans, but that's all part of the activity around the March plate change. So March is really going to tell us the strength of that battery electric van market.
Yeah, I mean, as you say, not really one from an LCV perspective, not heading in the right direction. So that 10% ZEV mandate level, and cars certainly not moving quick enough to get to the 22%. So there's either going to be a lot of credits bought and sold from EV manufacturers to non-EV manufacturers, but we will see. Let's see how March plays out.
So after the break, we'll have an extract from our interview with Regit founder and CEO Chris Ashton-Green, sharing some of his insights on after-sales trends, and do stay tuned for the rest of the week's headlines after that.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
Now, Chris, there's lots of challenges facing dealers in after sales, especially as they look to retain their traditional ICE business whilst also embracing EVs. What's your data telling you about how OEMs are promoting after sales and how they're actually addressing the different needs of EVs?
Yeah, so it's a really great question, and it's extremely challenging within our industry at the moment for many different reasons, which you guys touch on every week. But just focusing on retention, OEMs are losing market share in terms of some of the older legacy ones. Likes of Ford and Vauxhall, I think even BMW last year. Market share is down over the years. Now, I appreciate that some of the messages are, well, we're focusing on profit and not volume. And obviously getting rid of probably too many derivatives is a good thing, but that's still not to say that they don't need to focus on their existing consumer. And certainly when that car changes hands, so what OEMs are extremely good at is obviously know the first owner of a vehicle, but once that vehicle changes hands, either second owner, third owner, fourth owner, fifth owner, and so on, that vehicle is lost out of the dealer network. The OEM has no sight of it. And as a business, that's where we come in. We help OEMs identify those lapsed owners in order to get them back into their franchise dealer network, in order to retain the customer, retain market share, and make sure that they can hopefully keep them for their next vehicle. But that is challenging in itself now, and I think it needs to be a huge focus, especially with the challenger brands that are now coming in and wanting to take that user, certainly from an EV perspective.
But because, I mean, retention is just so important, isn't it? And are you finding that OEMs are building in that retention earlier than maybe they used to in regards to how they look at after sales?
Yeah, I think there's a refocus on it now. Certainly before COVID, there was a focus around it, probably not as strong as it would be, I think, with the new car market being so buoyant as it was a few years ago. And we were, I think, circa doing, 3 million a year or whatever it was, 2.5 million a year. There was probably not as big a focus. Then COVID came, then the rise of obviously buy online. And I think it's almost been forgotten about a little bit over the last 2 or 3 years. And then all of a sudden the Chinese come, and the Chinese and the various challenger brands that are coming are now looking to obviously capitalize on trying to attract that user to their brand, which is effectively means an OEM is going to lose market share, which means they're going to lose obviously work into the service and parts department. And I just think that's something they just cannot afford to do. So we are starting to see now a big refocus on it, actually, in terms of some of the briefs that we're receiving from OEMs around after sales recently.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Fascinating insight there, Phil. I mean, we do talk obviously about after sales on the pod, and it was good to hear it firsthand from Chris, because there's some fascinating programs around retention that certainly a lot of the OEMs are doing, and some clever marketing as well.
Yeah, no, you're right, and I think the full interview, as Curtis said right at the start of today, that is available on your podcast feed, shared earlier in the week, and Chris goes into things they're doing within the Vertu business, how they're working with OEMs and things like this. But yeah, I think that after sales is key now. One, for new entrants, as Chris was talking about there, but also for existing OEMs. It's always been a case, hasn't it, over the years of keeping that driver coming into that showroom, because that's where the opportunities are. And people like Bud bumper and things like this are all helping with that work. So I know there's a lot of work doing there, but it's very fascinating. So do have a listen to the full interview there with Chris Green from Regit if you get the opportunity.
Definitely. So back to the headlines, Phil. Next
geez.
headline. Yeah, we've got more headlines. So next story is from Car Dealer, and the headline there is average retail used EV prices fall by 15% to new post-COVID lows, says Motors. So this is the monthly Motors market view, which I work on with the guys at Motors. So I had early sight of the data on this one, and it's very revealing because, and particularly interesting and relevant following our monthly conversations with Darren Martin from CAP HPI, where a lot of the conversation is around the values, the trade values of EVs and how they've been coming down. Well, this is the very much the sort of retail view of it. And so the market view is showing that EV values on average fell by 15% year on year in February to this new post-COVID low of £27,000, £27,607. And that's on the back of supply being fairly flat, but online searches went up. So not more cars in the market, but certainly more interest in potential buyers looking at them. So within the market view, it found that EV prices have now been falling since September, when they were at a high of just over £31,000, with month-on-month drops now averaging about 2.5%. And this also reflects that older EVs are now included in that used car market.
Yeah, and Lucy Tugby, the marketing director there at Motors, does add a comment to say that the steady monthly downward realignment of prices from the highs we saw last year has continued, with the average price down to £17,000 for the first time since October 2022. So, making a point there that this realignment, this entry point, this cost of purchasing is starting to come down. But as you say there, Curtis, the EVs, it's going to be interesting for EVs, aren't you? Because you've got some of these early models coming back into the market. There's the new models coming out that have got a lower entry point, and how this starts to balance out there. But as Curtis and I always say with the market report there for Motors, always go and check out on their website, because there's a lot of detail within the report that covers all activity in terms of stock profiling and activity by fuel type and make, model, etc. So please do go and check that out at Motors.
Definitely, and we'll put a link to the full market view in our newsletter that goes out Monday morning. So next headline is from Motor Finance Online, and it is Vertu reports stable used car prices, but sale of new vehicles still uncertain. So really, continuing this used car market theme, and this is based on the latest trading update from Vertu, which covers the 5 months to the end of January. So within this, Vertu said used car prices fell 10.3% from October to December, and the fall in prices was attributed very much to increased supply in wholesale markets, as well as subdued retail demand. And again, that's something we've been talking about on a regular basis on the pod, and this has been exacerbated by rising interest rates and high vehicle prices. So you've really got this perfect storm, haven't you?
Yeah, but it does make a point that they experienced a 0.8% growth on like-for-like basis for used vehicle volumes during that period. So there is optimism there from Robert, and saying that the growth of a recovery from 5.7% decline in the first half of the financial year was optimistic. But like you say, still a little bit of negativity there from what's happening in the new car market, because he's saying that the market is still 17.7% below pre-pandemic levels, and that Vertu saw a 5.1% decrease in like-for-like volumes of new retail cars over that period. So a little bit more pessimism towards the new vehicle market, but a little bit optimistic outlook that the used car market is on a recovery. And he does go on to be quoted to say that he's pleased with the team's performance against a fast-changing market backdrop, with used vehicle prices now stabilised at lower levels and consumer uncertainty impacting retail demand for new cars, and that the work that has gone into cost control, optimising stock levels, has contributed to an excellent cash performance. So pushing out some positive notes there for investors in the Vertu business.
Yeah, definitely. So the final story of the week, we've got there.
But never the last on this subject.
No. This is definitely one that we'll be returning to. So again, going to Car Dealer for this one, and the headline is: FCA now asks every gap insurance provider to pull product from market. So this is something we've been tracking certainly over the last few months, and it really did come to a head this week, because the Financial Conduct Authority at the beginning of the week asked all gap insurance providers to actually pause sales of the product while it investigates the way Gap is sold. And the FCA said it had sent requests to the last remaining providers of the product to halt sales of Gap by the end of this month. So yeah, this is imminent. So last month, around 80% of the Gap market was pulled as insurers withdrew their products following FCA advice. And now what's happened is the remaining 20% have been asked to comply as well. So interesting development here on Gap sales, isn't it? And as you intimated, we're certainly going to hear more on this.
It's a shame, and there's been a lot of commentary on it, because I think when you go back to the dealer sector with what's happening in the discretionary commission at the minute, and FCA are certainly busy boys against the automotive sector currently out there, but it's a shame, because these products, albeit should be a good proposition for the consumer in terms of protection, but obviously FCA are finding that they haven't been paying out on them as they should have been possibly. But again, for the retailers, it is a margin line, it is a profit line for them within their revenues, and with all the pressure that's been on chassis margins over the years, and having to look at these add-ons as other revenue opportunities for the balance sheet, it's another one that has been removed, which is putting further pressure on the retailers to focus on that chassis or metal margin, as it's sometimes referred to, for the dealers. So it's a shame, I think, but at the end of the day, if it isn't a product that's right for the consumer, then FCA are doing the right thing by pulling it out of the market from the sector. But like you say, there's a lot going on at the minute, and I'm sure it's not between this and the discretionary commission that's going on in the background as well. It's not the last time we're going to visit the stuff from the FCA and the automotive sector, I don't think, Curtis.
Yeah, and I think you're right, because what they are looking at is the high cost of a lot of Gap products, and the sort of low claim rates on them. And within the story from Car Dealer, there's an FCA spokesperson who's quoted as saying Gap Insurance can provide a useful service to customers, but in its current form, it does not offer fair value, and we want to see improvements. And I think the key to that is current form and fair value. So the FCA will be looking very, very closely at how Gap is sold in the future, and we'll obviously want to see some of those prices coming down and sort of aligning at a much lower level.
Yeah, because they did previously. They did do some work around the selling price as a relative to the cost of gap, because some of them were being sold significantly higher. So there was a bit of realignment that took place, and some of the retailers did exit from selling gap because there was too much paperwork, and left it to third parties to sell to consumers directly. But it does say that that it looks like it will return in one form or another, possibly in the future. But because they're saying that they're working closer with the gap insurance companies to resolve these issues as quickly as possible, so that consumers or customers can access fair value products that meet their needs. So, at the minute it's not good, but it does look like they are working on a solution to return the product to the marketplace.
Yeah, and I'm certainly picking up from conversations that I've had over the last couple of weeks that there's a lot of dealers who've paused gap and looking at other added value items, be it maintenance packages, service plans, that they can give a bit more focus on, rather than that being dependent on gap, or almost weaning themselves off gap. Yeah. So we'll see how that one pans out.
So for something that busy headlines this week, Curtis. So it's been a long one. There's been a lot going on. So like I say right at the start there, I think more than ever, we'll share the links to all these stories and the Motors Market View on Monday morning through the usual LinkedIn feed. So I would suggest checking out the stories in full. There's a lot of detail in some of the stories that we've covered today, and as always, there's a lot of stories that the media is covering that we haven't talked about today on today's podcast. But it's been a busy week so far, Curtis, and it's not over yet, is it?
You know what? So far, it's been one of the more challenging episodes to pull together, because there was so much going on this week. But I think we've given a fair summary of certainly some of the biggest stories, and we'll maybe pick up on some of the other stories next week. But that really is all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next weekend, it's goodbye from me,
and it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.